Last year, when the MAS clamped down on Singaporean unregistered, unregulated entities serving offshore clients from within the Singapore borders, a lot of our competitors and the employees from those companies were scared and they had to leave Singapore. They came knocking on our door. We hired some of them. Being able to sleep at night, but also in terms of business, what that enables us to do is that now that we're regulated, we're a major payments institution, the tier one banks want to work with us.
That's Xin Song, CEO of GSR, a global cryptocurrency trading and investment firm specializing in liquidity and financial infrastructure for digital asset markets. He believes strong regulation can become a competitive advantage by building trust, attracting talent, and unlocking partnerships with major financial institutions.
We put $10 million in, but we raised another $90 million for these companies on top of that. And that showed that we had the connectivity and the network to do it.
In this episode, you will learn why strong regulation can give crypto firms a competitive advantage, how GSR used its network to turn a $10 million investment into $100 million in total capital raised, and why trust, connectivity, and institutional relationships matter when scaling a digital asset business. I am Alex Nwaka, and this is High Stakes. So Xin, I know you're sitting in Singapore, which is home base for you, but maybe give the audience a bit on your background. You've obviously spent a lot of time like me on Wall Street, and then have moved into sort of the digital asset and crypto space in the last sort of 5 or 6 years. So maybe tell a little bit about your journey and some of like the key stops you've had along the way.
Yeah, sure, happy to. I wish I could say that, I'm a genius with a crystal ball and I made the bet 10 years ago that, crypto was going to be the big thing. But the real story is not quite as exciting as that. It's a little bit more prosaic. I'd love to hear, your story of how you got into crypto as well later on. But for me, I've always been a little bit of a geek at heart, I guess, right? I come from a family of engineers, not software engineers, but like real engineering, so mechanical engineering, civil engineering. They were building power plants and stuff. So I was always into like computers and things like that at the time. In choosing what to study at university, this was just after the dot-com bubble burst. So this ages me somewhat, right? Like early 2000s. And my dad, who's an engineer, said, well, don't go into engineering. There's no money in that. You got to make some money. I wasn't born with a silver spoon in my mouth. But this computer stuff, no, this is not going to work out, right? Like, look at all these scams and internet companies. So I didn't choose computer science. I kind of regretted that a little bit. But my career has always been at the intersection of finance and technology, right? Because those are the areas that were of interest to me. Ended up studying math and statistics at university, went into finance, but always looked at how can you use technology to make financial services faster, cheaper, better. My first job was, intern 2006 at what was then Barclays Global Investors, became part of BlackRock through the acquisition during the financial crisis. And it was the quant investing side of the company, right? So this was, using models and signals and data to take the, human elements, the subjectivity out of investing. And that was really interesting to me. Like fast forward, in my career, I wanted to do something earlier stage. I wanted to actually go to VC, like, a bit like you in your early career. But me being in London was not as sexy as being in California, right? So London, fewer opportunities to get into VC. And either you had to be a rainmaker and raise the money, or you had to be an operator to make it, to senior levels at a VC. So I thought, I'll go and be an operator, move back to Asia, became an early employee in some of the fintech companies there that were going through this kind of, fintech boom, like early 2010s in Asia, mobile payments and all of that was happening. VC money was quite hot. You had to either be in California or in China. I think those were the hotspots. And yeah, that's how I stumbled into crypto in a sense, right? I wanted to be an entrepreneur myself. Right. And I wanted to scratch that itch to be a founder. Initially, I did other things. I actually, most people don't know this. I even had a yoga app at one point. Temporarily one of the top ranking yoga apps or fitness apps in a few parts of the world, but it didn't work out. And I realized you have to go back to what you know, right? To succeed in startups, as you know, the stars kind of have to align to an extent. You need the technology to be ready. You need the regulations to come together. And you need some domain expertise. So went back to fintech, and it was a little bit of sort of necessity is the mother of invention, right? I figured, if I'm going to do something for the next, 20 years of my career, it should be at the intersection of technology and finance again, and blockchain at that point. This was 2017, the altcoin boom, right? The ICO boom. That seemed like it was going to be the biggest disruptor in our lifetime. So I kind of went headlong into that. Again, initially wanting to be a founder, pitching VCs like yourselves on trying to create a decentralized asset management platform, because that's the background that I came from. Was way too early, and ended up getting asked to run a crypto VC fund, because that's what people wanted, right? The VCs weren't deploying money anymore. They wanted market neutral, absolute return type products during the bear market. So you got to give the customer what they want, and that's how I got into crypto in the end. And here we are, 10 years later. I'm lucky enough to have joined GSR a couple of years after starting my own fund, to join a bigger franchise and help them as a scale up. So I think, I'm probably a little bit better at the scale up part than the startup part. I realized that, I'm less of a 0 to 1 person and more of a 1 to 10 person. And now that we're scaling, that's a pretty good fit and a pretty good balance for me. Yeah.
So I'm curious, Xin,
how about you?
Yeah. So for me, I spent, the better part of 15 years investing in, what I would call closed source, like software companies. And, I had a lot of experience with seeing what I'll call open source software be a better and more sort of resilient solution to a lot of problems that software could solve. The challenge was always, it was very hard to monetize open source. And so that's why you had everybody investing in closed source software. And when I saw sort of the Ethereum white paper, I said to myself, blockchain is a really elegant way of wrapping open source with incentive and sort of economic models in a way that like I had just never seen before. And so for me, it was very much this is the future of software. In 30 years, I think this is just what software looks like. These are the dynamics. These are the primitives. And then a lot of it unfolded for me from there. And so I sort of tied it to what I knew and had seen as a software investor, and sort of always prided myself on thinking, what does the world look like in 30 years from now, and trying to work backwards. Sometimes right and sometimes wrong, but also there's a question of like timing is so important. So Xin, I'm curious for you, like biggest lesson that you've learned in your previous career before getting into crypto that you've applied now that you've been in the crypto industry.
So in terms of what I've learned, from my previous career that would apply at GSR, I would say it's risk management, right? Like knowing what not to get into. And GSR's been in this industry for a long time, 13 years. It's seen multiple cycles, right? Ups and downs, at least 3, maybe 4 cycles now. And, what I learned from my previous career is like trades not to get into, right? Like life is a trade. Like we talked earlier about, career path and making bets, right? Like many things in life, it's a little bit of a bet where you're going to go. You talked about it, right? Like seeing this as the trend for the next 10 years. I placed the bet on crypto as something that's going to disintermediate finance, have faster settlements. So you got to skate to where the puck is going. In terms of the trades that we missed at GSR that were really good ones to miss, I would say it would be things like not getting involved in the borrow lending space early days, right? So this was, if you remember, like Celsius and BlockFi and Genesis, early days. You and I are TradFi people. We know what counterparty credit risk means. A lot of people really didn't at that time. There was a lot of over-collateralized borrow, but that felt safe. But it depends on the margin call process and how long you give people. And if the market's falling faster than you can margin call people, and you start getting cascading liquidations, that's super difficult to handle, right? So like learning that from what I did at BlackRock, from what I did at my own hedge fund, to make sure that we don't go into trades where the information is asymmetric or the payoffs could be asymmetric. I think that was pretty powerful in avoiding some of the blow-ups that we've seen across the years at GSR.
Super critical, right? I think ultimately one thing that living in the traditional financial services space for at least a good chunk of your career, the idea of risk management as sort of a core element and skill really, really like leaves an indelible mark. So I couldn't agree more. Xin, maybe for the audience, I doubt there's a ton of folks out there that don't know who GSR is, but maybe just a high level of, GSR as sort of a business and maybe a little bit of a preview of how it's evolved and how it is evolving, actually in sort of the present moment. We've always known you as a leader sort of in market making, but like as you and I were discussing in Singapore, there's much more sort of business and sort of categories you're expanding into. And again, I think that's going to make for a very, very interesting, what I'll call next couple of years. So maybe give folks a bit of a high level snippet tear sheet on GSR.
As you said, we're known for being a market maker primarily. We've been around for 13 years. For a large part of that time, we were known as, the first altcoin market maker. Right, we were the designated market maker for Ripple. Then through the ICO boom, we took on tens of new clients. We've served 600 token issuers through our 13 years of history, right, and a couple dozen exchanges as a designated market maker. So that's what we're known for. But really, the industry is evolving, and we have to, evolve with that. What we're doing now is becoming a much more diversified one-stop financial services platform. And what does that really mean, right? That means we're trying to provide services to clients and hold their hands through the entire life cycle of what an entrepreneur needs to do through, startup to public markets to becoming a mature company, right? So you've done that as a VC. You know how hard it is for entrepreneurs. Like we discussed earlier, the stars have to align. So we're just trying to take a lot of the workload off of founders that in Web3 need to think about more than just product market fit. They need to think about capital markets, and most of them are not from a financial services background. So outsourcing some of that, just in the same way that a trading firm, GSR, might outsource some capabilities to providers like yourselves, Validation Cloud, for on-chain data or other services. It's a natural thing for founders to think about outsourcing those and finding partners for them along the whole life cycle. What does that really mean? We break it down into 3 stages: early stage, middle stage, and late stage. Early stage, we're talking about, primary markets, private markets, when the project is, yet to be listed, right? So what do we do there? Well, from day one, what is the first thing a founder does when they think about starting a new Web3 project? It's probably set up my labs company onshore to employ people, developers, DevOps people, dev relations people to get traction, right? And marketing BD people. And then they have an offshore foundation to issue the token, typically. So we'll offer them foundation services to help set that up. We'll help them with fundraising, maybe being the first institutional to get in, as well as helping them syndicate across our network with VCs. And then, advisory on what about the tokenomics? What about exchange listings? And this starts getting really adjacent to our core business in the middle stage, which is as you go public, we're a little bit like an underwriter, betting on the entrepreneurs that are going to be the most successful, market making for them, providing OTC services for them, providing DeFi connectivity across different primitives, so that they can start to really get traction. And the key part of any Web3 project is you need liquidity. You need the token to be liquidly traded for the utility of the network to be realized, right? Because if there's too much friction in the system, people can't get in and out of the tokens, and they can't use them for the use cases that they're designed for. So that's a core business. And then late stage, as these projects get to a certain level of maturity, maybe they've started diversifying their own treasury from being 100% of their own tokens into some stable coins and other assets. Then they come to us because we built up a multi-year relationship, and they want to park their funds with us and trust us to be fiduciaries to them and offer asset management services. So that's what we're doing. We're kind of full service crypto universal investment bank, if you could think about it like that. And it's not too different from what a Goldman Sachs did for US Web2 companies like Facebook. I use that example all the time, but another example from my part of the world, I'm in Singapore. China. I spent a long time in China. If you think about China Renaissance, which is like a boutique Chinese investment bank, they did that for tons of Web2 Chinese companies like JD.com, which is Chinese Amazon, or Didi, which is Chinese Uber, banking the clients initially, IBD, being their market maker once they IPO, offering private wealth services and asset management services to their founders and to the companies themselves once they reach maturity. That, in a nutshell, is what we're doing now.
Well, I mean, one thing that, a word you use that I think is so important, as somebody that comes from an investment banking world where I've been, at two different very large scale firms in Morgan Stanley and UBS, you talked about relationships. And I think that that's something that's so critical in terms of when you think about how do you develop relationships with founders and different companies so that they come back to you for advisory, they come back to you for other services. One of the things I wanted to ask you as sort of the CEO of GSR is when you think about the culture and like the reputation, like what you all want to be known for amongst the cohort of folks that you serve, are there any sort of, words or sort of adjectives that come to mind that like you guys want to be very specifically known for that you are very proud of thinking about?
100%. I think the one word that jumps out, if I had to pick one, is trust, right? Like we talked about trust. You just mentioned relationships. What are relationships built on? They're built on trust. Ironically, we work in the Web3 space and it's supposed to be trustless and we're supposed to rely on code and smart contracts. It's not quite there yet, right? We will get there. It's substituting one type of trust in individuals, in controls and belief systems to, trusting code and ensuring, you've plugged all the gaps in terms of potential attack vectors and exploits, hacking opportunities, right? But, that will take time to develop into, really trustless ecosystem. For now, there's still a decent amount of centralization across crypto and Web3, right? And trust is the key one. For us, it goes through everything that we do, right? We take time to listen to our clients and what they need, rather than trying to, hard sell pitch them services. That's why we've organically pushed into some of these areas, because our clients are just telling us, this is what we need. Can you offer this to us? And where we cannot offer it to them, we've generally gone and, made acquisitions with companies that we think culturally feel a lot like how we behave, right? So we bought Autonomous and Architect earlier this year, and they're the lead in foundation services and token advisory services. A huge part of the deal that like the aha moment for me to say yes, the deal was I spoke to the founders of that business, Eddie and James, who are now part of our team, and I asked them, how do you see the culture of your company? And their answer to me was, we sell trust, right? And that really resonated with me. Like, it doesn't matter what we sell, whether it's, advisory services or market making or OTC or asset management, really what we're selling is trust. And that might sound like super easy, but then I thought about it and I was like, holy shit, that's actually right? We're selling trust that we will do the right thing by founders, by our clients through the entire life cycle, look long-term, like you talked about, right? In your sort of career development, look long-term, be long-term greedy, and not try to make a quick buck and not be transactional. So really that's at the crux of like the kind of company our founder tried to build, and I'm, carrying the baton forward in terms of making sure that we're top-notch, above and beyond reproach in terms of like how we act in the industry and earn the trust of our clients, but also our partners across the whole space.
And for what it's worth, for like our experience, dealing with you all, we certainly feel that way. And so in some ways you guys have accomplished that in our eyes, but obviously it's also great to hear, just how intentional that is from you. Xin, the next place I would go is really around, you all obviously recently acquired a FINRA registered broker dealer that gives you all capabilities to do a variety of different things. I think would be helpful for the audience to understand, what does that allow you to do within sort of your client base? And then I think another component of this that it would be interesting for the audience to understand as you see it is how you would frame the landscape that you operate in now that you have a FINRA registered broker dealer. So who does this bring you into competition with, or who do you all see as sort of playing in your market now that you've expanded this capability?
Yeah, thanks for that. Super excited about this. So the first part of your question, what does it give us the capability to do that we couldn't before? I'd say it's a couple of things. I break it down into what we can do now and what we can do in the future. So now it's really fundraising, right? We have a broker-dealer license with the ability to do private placements for now. And that means, we're acting in the primary markets. We can help people fundraise in a compliant way, not just in tokens, but also equity. Right? So we can deal in securities. And what that allows us to do is to, in the kind of VC space, do private placements. If we have high conviction in one of our portfolio companies, we can go and help them raise funds across other investors, or we can do pipes, private investments into public equities, a little bit like what we did last year with digital asset treasury companies, right? We led investments and syndicated $100 million raises for a couple of digital asset treasury companies, one in Solana, one in the Litecoin space. And that was another, proof point to ourselves that we could do this, right? We'd never done it before. It was something audacious to go and do. And, we put $10 million in, but we raised another $90 million for these companies on top of that. And that showed that we had the connectivity and the network to do it. We worked with investment banks to do it because we didn't have the license at that time, and they were good partners to us, and we'll continue to work with them for future raises. But we're able to charge fee revenue for that now, right? Because we have the license, and that's super exciting. That means we can do public deals like this, but probably more so we'll focus on the private deals, right? So similar to what Republic would do for early stage companies, or Echo, right, which was acquired later on, would do for early stage companies, or Legion in Europe, but do that in a compliant way and help raise capital, because people are still building great companies, even though the market sentiment is weak, right? And we want to keep investing in those entrepreneurs and backing them. That's the first thing. The next thing is, well, we can upgrade that broker-dealer license to be authorized to do other things. And the secondary market is arguably even more interesting, right? That's like being able to deal in tokenized equities onshore in the US and trade them actively in the secondary markets. That means it puts us into the space of a Citadel Securities, for example, right? That's next. That's not going to be imminent. And I don't think that actually really is that pressing in terms of demand right now, because onshore US users have a pretty damn good trading experience for US equities today, right? They can trade them cheaply and easily through their brokerage accounts. So we're not solving a real problem. It will probably solve a different problem first, offshore, in terms of access. But that's what this license will allow us to do. Remind me of the second part of your question again. Sorry, I forgot about it.
Well, you touched on it a little bit, which is, who does this bring you into either competition with, or how do you see your landscape, so to speak, in which you operate?
I guess I touched on that for the future phase. Let's call it, phase 2 of tokenized equities. If we rewind and think about what phase 1 might look like, that's super interesting and more tangible, right? So before we get tokenized US equities onshore in the US, I think we'll get it offshore on centralized exchanges, but even before that, DEXs. So we think there will imminently be an innovation exemption by the SEC. We think imminently the SEC will give an innovation exemption to allow tokenized US securities to be traded on decentralized exchanges offshore. They have to be KYC'd, because then that you're not offering these securities to onshore US clients. So this will be the likes of, I don't know, Alpaca or something like that, which has optional KYC, right, for users. And we plan to be part of the chain of distribution of US securities offshore initially. I think that's exciting because, again, it solves a problem. Going back to the culture, listening to our clients, what do they want? Right now, our clients are telling us we want to provide access for people that can't easily trade US securities, and we can help be part of the solution for that, right? We saw that demand come through in the SpaceX IPO, for example, right? Not so long ago, a bunch of interest, more than $1 billion on these, sort of offshore centralized exchanges. But the model then was different. The model then was generally the wrapped model. This is, an SPV where you're looking for allocation in the SpaceX IPO. Ultimately, a bunch of people got disappointed in that. And we don't like to disappoint people. Going back to reputation, right? We want to be able to put our money where our mouth is. Be under promising and over delivering. So we think the model has to be real ownership, like tokenized real ownership, going to the transfer agents or going to DTCC themselves directly and offering real ownership, not just of the economics, but of voting rights, of dividends, corporate actions, etc. So doing that is probably phase one. And we'll have a Cayman offshore dealing license to be able to offer that outside of the US before phase two happens and it comes back onshore. That means we start to carve out like a quite interesting niche for ourselves, right? Like I said, we're positioning ourselves as a Web3 investment bank. If we can be a new age like lead underwriter for folks that want to access a group of investors that they couldn't before, right? That puts us in an interesting position against the Goldman Sachs and the JP Morgans of the world, who would typically like underwrite a deal on NASDAQ or New York Stock Exchange. We can be part of the chain of distribution to offshore users, and that's not competing with these bulge bracket investment banks. We can be complementary to them. We can work alongside them, but that gives us a really interesting position. When it comes onshore, then we're playing with the big boys, and we always want to play where we have a natural advantage first, right? Which is the offshore venues for now, because that's where we've got connectivity, we've got good latency already, right? We are not trading that actively, onshore on NYSE and NASDAQ yet. But maybe in phase two, that starts opening up. The walled garden goes beyond that, and we start seeing Coinbase and Kraken and Bullish and these types of venues be able to start offering the same thing. That's going to be super interesting.
So you can fact check me here or correct the record, but my understanding is that you spent roughly 4 years securing a market making license from Singapore's monetary authority. Obviously, we just talked about sort of the different sort of weaving, sort of regulatory sort of hurdles and processes. Obviously, that's a long period of time, but also a major achievement. So I'm curious, one, what did you learn from that process? Because obviously it's long, arduous, and I'm sure a lot of work went into it. But then when you think about that accomplishment in hindsight, what are you most proud of?
Yeah, it was 4 years. It was a hell of a long time, and it was arduous, like you said. So it was basically building a moat for ourselves, right? For us and our employees and our people, and protecting them. Because I learned this from experience. Like going back to what we said earlier at the top of the call, right? Everything has to align for things to come together and for a startup to be successful. The tech, the demand, the regulations. I ended up exiting some of these fintech businesses because regs came in, right? You had to have a banking license to do XYZ. You couldn't do cross-border M&A anymore because CFIUS cut down Chinese investments into the US companies. So I learned the hard way and got burned a few times. And this was about like, you have to play with the regulators. You have to take the long-term bet that the technology comes first, then the demand comes, then the regulators understand how to govern the space, right? So we just made a bet that Singapore was the right place to do it. They were progressive. This was going to happen, and it's necessary, but not sufficient for crypto to break into the mainstream, right? So we did that, and that meant we had a moat in terms of like being able to sleep at night, because we know that the regulators are not going to come knocking on our door. It's important, right? We've got 40 people in Singapore. Last year, when the MAS clamped down on Singaporean unregistered, unregulated entities serving offshore clients from within the Singapore borders, a lot of our competitors and the employees from those companies were scared, and they had to leave Singapore. They came knocking on our door, and we hired some of them, right? So like being able to sleep at night, but also in terms of business, what that enables us to do is that now that we're regulated, we're a major payments institution. The tier one banks want to work with us. They offer us pretty good, tight FX rates, which we can then pass on to our clients in the stablecoin world. Now that stablecoins are getting highly adopted for cross-border payments in particular, that's super interesting. That business has grown massively in the last 6 months. We're trading about $1 billion a month on that side of things, and pretty stable spreads there, right? Because we have really good FX rates. So that's real commercial value. And then in terms of like what we then learned from that experience. So the second part, in terms of what we learned from the experience, I think it's that this is the right path. Like we've got to double down on this, and where we have substance, we should just protect our people and grow our capabilities, right? So just like we have a hub in Singapore, we're doubling down in our other major jurisdictions. In the UK, where we have the bulk of our workforce, 100 plus people, we're already registered with the FCA, and we plan to be fully compliant with their crypto spot regulations that kick in next year. Maybe expand that to like a full UK MiFID license for derivatives and securities as well. Cayman, the other jurisdiction that we've pushed into because of the acquisition, doubling down on that securities dealing license, asset management license, partly to serve the tokenized equities market that we talked about earlier, and also to build out our asset management business. So like it's a good model for continuing to expand capabilities and protect our employees whilst doing so.
So we talked earlier about tokenized equities, and I think that that's a lot of talk in the just sort of industry and sort of beyond the industry in terms of big applications for the technology. You mentioned, and I think this is totally spot on, if you're in the US, stocks and equities trade fairly cheaply and efficiently today. But when you think about, sort of the possibilities around tokenized equities and what putting equities on chain can solve or sort of extend, how would you talk about sort of the, maybe the upside or sort of the, where do we go next with once the equities move on chain?
We talked about the access point already, I think, right? So that's one big pain point that we're solving. The other ones, that there are quite a few, right? I would say capital efficiency is another one. So just the rails that the equities move on, they've just changed over time, right? So before the 70s, it was a paper-based system for US equities, and the exchange would shut down on a Wednesday so people could shuffle papers around. Like, it's just crazy, right? It would literally be a 4-day trading week. And now we're talking about 24/7. Why? Because the underlying ledger efficiency enables that to happen, right? So move to being computerized. Okay, went to 5 days trading. We're now doing like 24, 5.5 in some areas that have TradFi exchanges like SGX, right? Singapore Stock Exchange. Like we're making markets on perps there, and that's moving towards longer market hours. Now, NYSE is moving in that direction as well. Why? Because they understand that people want to trade 24/7, and they want to be able to reflect their views on the market at any given time, right? Like the geopolitics in the world doesn't stop on a weekend, so the people want to trade as often as they can. And that's another pain point that's solving. But my original point on the capital efficiency side was, if you move this on chain, then you're freeing up capital that's typically tied up in margin, right? So US equities used to settle T+3, moved to settling T+2. That's an efficiency gain, but it's still like tens of billions of dollars locked up in the system. And if you unlock that capital efficiency, that's real money, right? In the interest rate environment that we're in now, it's real money, it's real savings. So that's another pain point on top of the 24/7 trading. And then the final thing is kind of like ownership, incentives, and granularity, what that can do, plus like what it unlocks in the DeFi world. So what I mean by ownership incentives, why would you want to own spot physical instead of just trading the perps, right? Like, people ask me that all the time. Like, why wouldn't you just trade equity perps on Hyperliquid, right? People are doing that now. There's huge volumes there, but that's a synthetic contract, right? So if you go into spot physical and the model I talked about earlier, where it's going to the transfer agents, having real ownership, that unlocks a couple of things. Like, people were talking about new ways to play with equities. If you own Apple stock, for example, and you walk into an Apple store, you can prove that you own, Apple stock. Can it trigger incentives like discounts on hardware on your next iPhone? I don't know, things like that. People have been talking about that for a while. It can also then get more granular. Instead of owning the entire, revenue stream for a company, could you pick specific business lines? Could you just take the iPhone product category and not the rest of the Apple business, the services business, etc. Right? Like you could start getting interesting unlocks in terms of granularity of ownership. And then finally, if you own the real like spot physical, you can do interesting things in DeFi. You can post it as collateral. You can, borrow lend. You can leverage via looping, things like that, which you wouldn't be able to do through like a synthetic contract that isn't, composable, portable, fungible across different platforms. So I think these are the things that people are not fully thinking about yet, and they're just thinking about, purely for speculation, you can just use perps or other synthetic exposure to achieve that, right? But I think people want to do more.
I think that's like a fabulous articulation of all the different, sort of components. And I would say of the things you listed, like I don't even necessarily think about, 3 of them, like, now that I'm in the space, right? So I think that's just sort of an element of, again, just how much sort of additional sort of optionality and sort of capability that on-chain provides you. So Xin, I'm gonna sort of switch topics and switch gears. AI is the topic of conversation like everywhere. You can't really like have a conversation either like personally or professionally without AI coming up. So I'm curious from your perspective, running one of the largest, liquidity providers in the crypto space, where do you see AI intersecting with your business today? And like how much of it is you think the AI discussion's hype versus, real today?
Definitely a bit of both. The hype, so maybe start with the hype stuff. Like what we're not doing is allowing direct use cases of AI to release production code in trading use cases or core engineering systems that form part of our cell-phone infrastructure, right? That's dangerous today. Like if you just have an engineer vibe or a non-technical person vibe code something and then release it to production, that's super dangerous. So we have to have controls around that. It's not there yet, but 1 year ago, it was much worse, right? So the speed of progression is pretty hyperbolic. I'd imagine, not too much in the distant future, we will feel comfortable doing that. But right now we're not. Outside of trading and engineering, there's huge value in it, right? And we have a big program. We've got champions in all of our other functions across the business, whether that's like BD, legal and compliance, operations that are actively using this every day, whether that is streamlining our flows for client engagements, pre-call prep, post-call follow-up, a proposal the same day, pulling that data directly into our CRM systems. That's an obvious one. The operations and legal and compliance processes, obvious ones. Improving the client onboarding experience, right? Making sure we follow up with people, making sure that our partners and our portfolio companies get regular check-ins, that type of thing, and generating documents and dashboards to track all of that. Super powerful. But for training and engineering, not just yet.
And our viewpoint on this too is, we very much developed Maverick, as you and I talked about, around the construct of being able to understand what's going on across assets, protocols, and networks, and trying to really bring that all together in an intelligent manner that I think drives business value, is something that we see as, very much needed. And again, we were discussing, even just in treasury management, right, the implications of that. And you coming from BlackRock and where you've just again seen whether it's rebalancing portfolios or thinking about how you manage risk, like these are all things that I think data not only enables, but also I think creates a ton of value as it relates to both risk management and opportunity. So Xin, I want to be conscious of time. One thing we ask all of our guests as the last question is what their high stakes hot take is. And so what's your boldest prediction for the digital asset space over the next 12 to 24 months? And this can be, something that for you all at GSR is something that you're watching very closely, or it could be something that you personally think not a lot of people are paying attention to that you want to highlight.
Maybe just before that, just to like riff on what you said earlier around AI, I think like insight, right? And being able to get the signal from the noise in data is super important, right? Like we are using it for that use case. So, you talked about Mavericks and what you can do for on-chain data. It's analytics and insight, not just data. And being able to trust that data is super important, right? So right now, collecting the data is not so much the pain anymore. When we started, it was super hard because there were no vendors, and we had to do everything ourselves, not just like on-chain data, but like centralized exchange data, right? And that was a pain in the ass because the APIs were crap, and we would disconnect, and the quality of the data was questionable. Of course, like centralized data, there's more concerns around how truthful the data is. Is there wash trading here? With on-chain data, that goes away to an extent, but not always, right? Even with on-chain data, the question you have to ask is, can I trust that the activity that the data shows is from like real organic users, right? Meaning, are there independent wallets that are transacting it with each other? Is this volume, is the TVL, is the user growth coming from independent users that are putting capital at risk for like a real economic reason? Because that's what all trading firms want to access, right? They want to access the end user that has a real reason to invest or hedge or speculate, whatever that might be, and not like artificially inflated data. So I think that's the kind of thing that AI and Mavericks and sort of insight platforms can offer. Just wanted to put that in. And then to answer your question around like trends, I told you at the beginning I don't have a crystal ball, right? But if I had to say, I think it goes back to tokenized securities. We talked about the US markets, but people don't talk about like ex-US. We forget that like ex-US equity markets is still 50% of global market cap, right? Like there's a whole other half of the world that we haven't touched. A couple of markets are particularly interesting: Korea and Japan in my part of the world. These are very large, very, very mature capital markets as well, and had a lot of attention because of recent AI narrative trades, right? So Korean memory stocks or Japanese fiber companies, equity markets going bananas. And the access to those markets is way weaker than it is to US markets, especially places like Korea, which have capital control. So we're thinking about that. We have to work within the existing frameworks, but those markets are starting to open up, right? From May this year, Interactive Brokers started offering people access to Korean equities. And so, SK Hynix and Samsung and all these stocks became super hot. But we are working on, as more assets become tokenized, come on chain, not just equities, but bonds, local currency debt, private credit. Like
these are huge markets. I mean, these are huge markets. We always talk about, everybody loves to talk about equities, but then you talk about like the fixed income market. You talk about the currency markets, right? I mean, you're talking orders of magnitude bigger, each one of those, than the equity markets.
100%. Couldn't have said it better. Yeah. And so like that opens up all sorts of new interesting trades, like FX and carry trades, relative value positions between, different, sovereign debt markets, right? And so that's what isn't quite there, and not that many people are talking about yet. And we're already, planning for with market entry, with regulatory roadmap, etc. And I think you said 1 to 2 year time frame, right? I think that's probably the right time frame for some of this to start becoming realized.
Well, let's stop there before you and I geek out on like different types of trades that could be enabled by a lot of these markets moving on chain. Xin Song, CEO of GSR. Xin, thank you for coming on. Really great episode, and looking forward to having you on again soon.
Thank you, Alex. Hope to see you soon. Take care.
That's a wrap on High Stakes, the podcast where Web3 meets the real world. For more insight into how blockchain and AI are reshaping institutions, head to validationcloud.io and follow @ValidationCloud across all socials. Stay tuned for more conversations from the front lines of innovation. I'm Alex Nowaka. See you next time.